like the markets are ignoring what's happening in the commodity universe so far at least. But do you think anything materially above 90 and then the equity markets will begin to feel the heat?
Well, yes, there is no doubt that if the oil prices were to continue to sustain higher, there will be some pressure on the economy. For now, at least, the quarter that has just ended will actually show commodity prices being relatively lower, and therefore most of the companies that are, manufacturing companies will show a increased operating margin. But going forward, I think oil is something that one needs to watch for. I have been saying that we should be expecting an increase in oil, in energy costs because of the fact that, despite subdued production, despite the fact that there are global issues which are preventing free flow of oil, despite all of that, the prices were remaining, well under control, and we had significant cutback in terms of production. I think that will now begin to show up in higher prices, as we are already seeing.
What's your specific thought coming in on the real estate sector? Obviously, the whole turn is coming around. But, is it interesting to have a play coming in for the property plays, whether you look at in terms of cables, switch gears, or the pipe companies? Is that going to be more of a play that one should watch for? Or would you be like, would you play with pure play real estate names like something like a DLF or a Prestige asset? Is that more interesting?
The real estate companies have had a massive run. I think you will soon start to hit some kind of a pushback because you're already seeing that most of the higher or more expensive properties are the ones that have done very well. The mid-range has more or less been flattish, and I don't think that there is much that is going to happen there because that's the kind of income distribution we are also seeing in the market. How much can you sell in terms of the premium? Maybe in certain areas you can. But if you want a generic way of playing the sector, I think the better way of doing it is not even the inputs that you mentioned, including pipes, electric fittings, and so on, but perhaps simply housing finance. That's been a somewhat ignored sector for a while. And, you've had the banks moving in fairly strongly. So it's been somewhat of a contested sector. The margins have been slightly under pressure. But I think that remains the cleanest way of playing a housing cycle uptick. And the interesting part is that the companies are not particularly challenging in terms of valuation, etc. So overall, I would argue that if you are looking to play the housing, a smoother, less bumpier ride could be had through housing finance.
Anand, what is your thought when you look at some of these new age tech names? And Zomato, there's no stopping that, right? Look at the price right now as well. 187 is what it is trading, and I believe it's one of those highs again for Zomato as well. Whether you look at it in terms of a 52-week high, also I think it's around those levels as well. Zomato still something that you would look at, or maybe now just wait and watch?
Well, it is not as if these are cheap stocks by any stretch. So if you are looking for growth, the interesting thing about Zomato is that they managed to pivot and get into a slightly higher growth path and sustain there, which is something that very few companies among the new tech companies have managed to do. Many of them have kind of floundered and been unable to reduce the kind of spend that they had to without increasing profitability. Unlike Zomato therefore deserves some amount of premium. But whether you want to buy it at this level is a matter of personal choice, in my view. There isn't that much margin of safety. And you are assuming a kind of sustained growth, which to my mind will be difficult to justify going forward because there is a pushback that will continue to happen going forward as well from many of the supply companies. And I think you will see that happening sooner rather than later. So I think, from a growth perspective, that done extremely well. The market has rewarded them handsomely. If you are holding on to it, no reason why not to. Fresh money, I'd be a little more circumspect.
Anand, what is it that you've made of the Q4 updates which have come in from some of the smaller banks? And I'm going to skip HDFC Bank definitely out of this list. But for RBL, very strong growth is what they've recorded in the fourth quarter, improved their CASA ratio by good 140 basis points on a sequential basis. For Suryoday Small Finance Bank as well, the disbursement figure has been very, very strong. For Jeevan as well, a very healthy uptick. And same is the case with AU Small Finance Bank. And your take on, the quarterly performances that have been issued by some of these smaller banks?
Right. Sorry. So these, you can slice and dice the banking sector in many ways. Frankly, one of the key things you have to remember about banks is that they should be robust enough to take shocks. And we have seen repeatedly that the smaller banks have a disadvantage there, besides, of course, the fact that their liability profiles will always be at a higher cost, which will mean that the disbursements and loans will also have to be given to higher interest rate bearing clients, which automatically means that they are riskier. If you look at it just structurally, we've had regional banks for a long time, and finally you had to get rid of them. So cooperative banks have been a major source of problems. Companies which have been offering money to microfinance have every 3 years had a major shock. My take is, unless you are basically just chasing some kind of momentum, it is perhaps better to go with banks which have the robustness and established ability uh, to lend money and get it back, rather than just lend money and show high growth in certain periods of time. So I would still prefer more stable, larger banks in general. In terms of the where the smaller banks are, obviously, because they are lending to a more aggressive segment, so long as that segment does well, their numbers will be quite good.
Uh, Naresh, let's get in a
Anand, how material is the RBI policy going to be tomorrow, considering it's a status quo on rates that one is anticipating?
Well, it will be lost by the end of the day, but I think the more important part would be to see whether they do something which is shockingly different from what is expected. I don't think there is very little difference between the US and Indian interest rates. You have least premium there, and that will mean that your policy to a large extent has to look at what's happening overseas and not just what is happening within the country.